And on Friday the 21st, MBS were down 3 basis points. Early stocks were down 9 points. The first time in the history of ever, Canadian retail sales actually moved our bond market. Canadian retail sales came in at negative 0.3 on an expectation of plus 1.6 month over month. It was minus 0.7 versus an expected 0.9 plus if you excluded autos. To be fair, this actually probably didn't account for all of the gains, but the fact that we're even considering that or that it could have possibly moved the market is kind of a real testament to how sideways times are right now. Later on, we got the S&P Services PMI, which came in at 53.7 versus a 51.5 forecast. There goes those theories about the economy contracting. It was 52.6 previously. The manufacturing PMI came in at 50.4 on a 49 forecast. Once again, the market is showing us how data hungry it is, because that is a bigger than normal reaction today than we would normally get to S&P PMI data. The outlook for next week is that we will get a lot of economic data. And if it shows the slowing economy, we can see rates improve a bit further, but not any big drops in rates. Fed members are also gagged after today ahead of the Fed meeting, so their influence on rates shouldn't be felt very much next week. The national delinquency rate fell below 3% for the first time in a while. This is generally a seasonal aspect to the DQ's fall in March due to tax refunds. Foreclosure starts and rates increased, however, and they are still well below pre-pandemic levels. Fed is rethinking its decision to loosen the stress test requirements for banks with under $250 billion in assets. Under the relaxed rules, only the bigger banks were required to add unrealized gains losses to their portfolio for available sale securities. The Feds think this might have allowed the Silicon Valley Bank to hide its problems. That said, Silicon Valley Bank wasn't hedging its interest rate risk on its portfolio, and that was the issue, which is pretty dumb. The data-dependent theme kept on rocking all week. Traders even let the lowly S&P 500 Global, previously called the market PMI, get in on the action today. Like we said, we also saw some reaction to Canadian numbers. After opening in a slightly stronger territory, a better-than-expected services PMI reading pushed bonds immediately, obviously into weaker territory. The rest of the day was very flat in yields, hitting 5 p.m. at almost the same levels seen 5 minutes after the PMI. So at the end of the day, we were up 3 basis points. Stocks were up 3 points. The 10-year was up 3 basis points. So at 100.59, that puts us right in the middle of this range between the red flat line and the black 50-day moving average. So it's a very narrow range. So hopefully, we have been seeing a relatively high degree of consistency over the last couple of weeks here, or even a month, versus what we saw previously. So at least we're getting some consistency on that. A new housing report by NAR reveals that middle-income homeowners accumulated $122,000 on average in wealth as their homes appreciated by 68% in the last 10 years. Granted, 10 years is a long time to make $122,000, but it is a move in the right direction. We also got a post from our sponsor at realthatmakesense.com. This is a great post from Jocko Willink. It's all about fear. Fear is normal. Every person faces fear at some point, but what you shouldn't do is stop. You just take a step, take one step, step aggressively toward your fear, and that step is into bravery. So take a step, go do it. Looking at next week, on Tuesday, we get Case-Shiller Home Price Index, the FHFA Home Price Index, as well as a 2-year auction. Then on Wednesday, we get a 2-year and a 5-year note auction, as well as durable goods orders. Everybody's going to be looking at that real heavy in advance of getting the PCE on Friday, which is going to be a big one to indicate what the Fed's going to do. We're also going to get jobless claims, of course, on Thursday, and the GDP advance number, as well as a 7-year auction. So we have a bunch of auctions. But that PCE number coming on Friday and the consumer sentiment are going to be the big ones that are going to help predict the Fed's actions in the coming weeks. Over the weekend, take a little bit of time, check out our common sources and influences at realthatmakesense.com, our sponsor, and all the other great sources of information.